Good morning and welcome to today's webinar, Real-Time Daily Trading Ideas. Today is March the 22nd and I'm moderating our international webinar from our office in Berlin. My name is Alex Roftopoulos and I'm happy to be talking to you. Today we will be speaking about trading ideas, strategies, market screenings, and we'll be answering your questions. Before we can start with the actual webinar, we will briefly present the risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to its complex nature. Please make yourself familiar with these instruments by using a demo account if you are a starter. Please feel free to contact us if you need any assistance with that. Please also note that none of this is investment advice. The statements made in this webinar only represent the personal opinion of our traders. You can find the whole risk disclaimer on our website. Here you can see the schedule for the week. Today it's Dirk's turn. And before I finish off with the introduction, I would like to invite everyone interested in trading to try us out and benefit from the best index and forex offerings with spreads of just 0.6 pips. Please also feel free to have a look around our website and explore our international activities. And do not hesitate to contact us should you have any questions. Enough of me for the moment. Now it's Dirk's turn. Let me quickly pass you over the screen. Zack, there we go.
Okay, good morning, Alex. Good morning to you all. And hopefully everybody is happy, like this girl in the background. I heard from your place this morning.
Sorry about that.
No, it's always nice to hear people laughing. Come on.
That's true.
So, by the way, we started this morning with a couple of, let's say, things we could laugh about as well. If you look at the so-called Brexit theater, that's something not only a theater, it's a tragedy, which is going on and hopefully not going on forever. If you have a look at the news, you will see that the 29th of March date is now skipped and could be 1st of one, could be 12th of April. Eventually the British will take place, we participate, let's say it that way, at the European elections. You never know whatever is going to happen. And if you read lines this morning from CNBC, if you read the line, just listen to this sentence. May says she's still confident UK will eventually leave. So it's the word eventually. So that's kind of crazy. Nevertheless, if you look at the euro US dollar this morning, crazy ride as well. From the monthly chart you see here, of course, nothing very dangerous. But if you go to the hourly chart, you will see what happened. Oops, you will simply say. It is the so-called PMI this morning, the German PMI, and this one disappointed massively. And if you have a look at the numbers, the Germany March so-called flash manufacturer PMI was published with 44.7 points. Of course, 48 was expected. 48 is still a contraction number. Everything below 50, you know. But 44.7 is really crazy. And that led to a massive sell-off in the euro-US dollar rate. And this is why we simply tried to jump in with the first try here. And let me explain you why. We jumped in here. We will have a look at, first of all, at the longer term charts. As you know me, you will always know that we have some kind of Fibonacci research before that. And we will see a line from the low, from the multi-year low, up to the 2018 high. Just widen the picture right now. You will see. Just let me check if that is correct here now. That is the correct spot to hit, and that's the correct one as well. So you see that we already reached that 61.8 level. That kind of 61.8 level from this longer term Fibonacci analysis from the multi-year low to the 2018 high brought us to 111.90 with a 61 retracement, 61.8 retracement. Now, very funny to see. On the one hand, you could say it's self-fulfilling prophecy with all that kind of Fibonacci and technical analysis stuff, but at the other hand, you will see that it is really true that we stopped around this marker and got a massive support to the upside. And of course, same stuff as always. You will have important days where so-called turnaround is happening, and that mostly is a central bank date, like the ECB rate decision at the 7th of March, where we got this multi-year low at 111.76, and the Federal Reserve, where we got a massive, let's say, spike to the upside. You see that move from the last Wednesday here, from this Wednesday. Massive, let's say, spike to the upside, only for a reason. If you looked at that stuff at a 4-hour or 1-hour chart, let's just do that for a moment, you will see that this kind of a fat move was due to typical market techniques, and this is something like, it is called a so-called short squeeze. So everybody in the massive, in the way of being short, got kicked out of the positions by this kind of a needle to the upside, by this kind of a spike. And later on, you will see over the course, over the next hours and even 1 or 2 days, this kind of a move was completely sold back down again. What are we going to do now, and why are we going to be long for try this Friday? Well, we have a look at the, let's just widen that on the 4-hour chart and possibly just zooming in. No, it's too much. And we will do that with a Fibonacci analysis here on the 4-hour basis as well, from the low up to the fat high here, so-called fat high. I'm just calling it, we could also call it Wednesday high. And you now see that there is another 61.8 showing up on the 4-hour basis, and that one is around the level of 112.80, close to 112.80. Let's just skip it that way. It's in direction the 112.80. So this one, as you can see, the buy zone was around the 113, 113.15, 113.17, 113.18 handles, slightly above that 50 you see here. And the stop loss scenario is a little bit underneath that 61.8 level, which is around the 112.67 here. And that one was just elected by any chance that we have a little bit more room underneath that 61.8 if that one is going to be tested. Of course, the more people are trading like this, the more it could be tested to the downside, and typically turn around at our stop loss at 112.60s, 112.65ers, as that always happens. Because simply to say, everybody, usually pros can see your stuffs, and probably they're about to fish them. I'm not talking about brokers. I'm talking about trading pros from funds and stuff like that as well. So that's a typical scenery from the Forex market, and from a couple of markets as well. What are we going to expect with this long scenario where there is a so-called target? Well, first of course you see these Fibonacci tools here, the Fibonacci retracements down up the road at 38.2, at 23.6, and a couple of interesting, let's say, things on top of that are so-called option expiries today. And option expiries, if you have a look at Euro-US dollar expiries, you might find a couple of billion up the road in direction to the 130.50, and in direction into the marker of 114. To be clear, around the psychological level of 114, there's 2.3 billion of option expiries volume, and even more up the road in direction 114.30s, 114.20s. So that's a lot, and it could be a little bit of a yeah, let's say feedback for us that we will try to move back a bit. That doesn't mean that we will end up at directly 113.90 or 114, but it could be a little bit of a help that we reverse a little bit up the road here. So enough said for that Euro-US dollar stuff. Let's check out what is going to happen with the German DAX here. Just move that, yeah, let's say longer term chart. I always showed you that one with the blue trading box where we possibly have a turnaround at this scenery. And as far as we can see, here this 161.8 projection from this old chart level, this blue trading box level here is always been sold down the road. So possible targets, as we spoke about last week, are already up the road in direction to 11,480s and 11,405s, the old low. First of all, we will have a look at the Xetra DAX this morning, Xetra openings and of course not openings, Xetra resistances and supports. And you always see that stuff. I prepared you that one here as a board, a special board with resistances at 11,599. And 11,648 pivot point is 11,533, and supports down the road 11,484. So if you check out the current level, that support 1 got hit right now, and possible support zone 2 is at 11,419. This morning I thought first try, and this trade got stopped out. I thought we will test the EMA 200, so the exponential moving average 200, which is at 11,657, and possibly target for a first trade setup for buying into that move up this morning. That was a big mistake. 25 pips got kicked down the road. But anyway, that's the first try, and a couple of trades ahead until Xetra DAX and until the DAX late trading is being closed and we are running into the weekend. So possible relief rally or relief move, let's say it that way, could be leading into a direction of the pivot point, which is at 11,533. I wouldn't give too much up the road since all this talk about Brexit and all this talk about current trade decisions and the really bad PMI data this morning will have to be a little bit more time, give it a bit more time to have a chance to reverse that up the road. Okay, that was the DAX. Things to say about the Aussie. Next trade scenario. As you always know, I just take the old chart that way because we are speaking about what we said last week. On top of that, we will have the chance to have a look at current status and the current moves to the downside. And we spoke about a possible reaction to the downside last week. That one was being deleted and going up. And right now we have the chance to, let's say, have a new target to the downside because we tested that 61.8 level here massively, as we see it around that fat decision. Of course, that had a big effect on the Aussie as well, and we will have be seeing a couple of targets down the road in direction 070. So possibly 070. Have a look. Oh no, it was the wrong one. I wanted to express it that way. Open a market watch and opening a new chart window. Why does it not work? Okay, it is working, and nevertheless we are opening that one on a 4-hour basis and check out the last low. Check out the last low with the last high, and just do that way to find the next possible target for a shorter term. So seeing that 61.8 is at 70.66. And then a possible jump to the road to the old low, which is, why is it not working, at completely 070. So now you guys would be surprised if I tell you that even a couple of option expiries in the Aussie US dollar today are working as well, and these are going to be expiring massively between this 61.8 level here. So I will just have something like a blue box here so-called target box this time, where we could jump in. So possibly trade target for a really short trade, a short trade, let's express it that way, is going to possibly hit that 61.8 level around here. It wouldn't be too greedy. It's Friday, and always think about you don't want to end up in losses at the weekend, running into the weekend. Shouldn't be doing that stuff. So don't be too greedy. Just collect a few pips here and a few pips there, and be happy if you end up in a nice positive territory. All right, let's talk Brexit. Where's the euro? Where's the pound? The pound. Okay, cable. Same stuff here. I entered that blue trading box, and from last week's chart, I brought in this red arrow. Not too bad. Looking into a new chart right now. Doing the same here with the market watch and opening up a new cable chart. Just closing that one. Daily. Let's just widen that one to a 4-hour and just check out the last moves. And doing that from the upside, of course, first to the downside to that needle here. And other way around from the last low, we can see from the last days, or let's say from March, hitting up to this high. Just checking out if that one is correct, because it looks a little bit weird here. Okay. And checking out if that is the right low, 129.60s, 129.82, and 160s. Okay. So that possible first target to the downside here would be a blue trading box we can draw up here between that 100 and 0 and those so-called lows, that old lows. And up the road, we will see the 61.8 level, which is at, just try to describe that one with that black horizontal line, which is at 131.20s. And this is a possible target for that kind of a relief trade to the upside this morning, going up to the level of close to 132. Again said, not being too greedy is always helpful. If you just have a little bit of a direction up the road and you are able to catch the first 10 or 20 pips, you move your stop loss to the entry zone and try to just ride it a little bit more up the road and slightly collect 10 or 20 pips. Of course, you can even do it with a half out method and moving the stop loss to the entry after that, as you like it. A possible reaction to the upside is only for a reason, because we simply have a little bit of a political relief, a little bit of a so-called room of time where Mrs. May and her government and the parliament could decide the other way around, and to simply say yes to that trade Mrs. May negotiated. In my opinion, that won't happen because they don't like that trade. And in my opinion, that Brexit 29th of March date moved to the 12th of April or whatever might be another mistake. And it's just being a little bit of let's say it's just a short buy of time and nothing more. And in the end, if everything is not working like the Brits wanted to work, or let's say like Mrs. May wanted to work, they simply have the possibility to revoke Article 50 and leave it. Well, I'm not sure if that is going to be happening, but there are only 3 possibilities. And I think 27 countries are not willing to negotiate until the end of the year or whatever time they will be setting. Enough said from the political stuff. Enough said to that cable trade here, or that cable trade scenario. As we always say with that option expiries, we got to see that from the US dollar side. I told you we saw that from the Aussie, and the same stuff will be happening at the cable this morning. Not sure if that is enough volume to bring it up in direction of that trade setup I told you, in direction of the 131.90s or even above 132. Let's say if it's happening. Other way, we might just lose in direction of 40 to 50 pips with that stop loss scenario here. Okay, market watch. Back to a couple of other stuff we talked about last week. That kind of a loony trade is another one. So we had a relief move to the upside after we dropped that downward moves with the red arrows here, and we possibly are now in reaction zone to going back down again. Why? Simply using another chart window as well here, and having some of those Fibonacci levels here from that high to that low as well, and seeing that this kind of a 61.8 level might be the level of interest again. Looking at this at this 134.40s here, and having that one around that 50, which is not a 100% Fibonacci level. If you check out how Fibonacci levels are working, it's just the half of the move, which is being corrected right now, and which is being used to selling that one again to the downside. To have it more, specifically using the so-called Fibonacci analysis, you will be using that 61.8 level again and try to be short in direction or around that 61.8 level here. Using that shape here again would be the same level like we saw here with a couple of spikes, just to squeeze the shorties out of the positions and then using the right way down the road. Okay, targets for that one, if we get that move to the downside here, first of all, round cycle level of 132, and over the course of the next weeks to come, that could be in direction to get old lows. I'm just seeing that we didn't use that one here, 100% correct. Sorry for that, but just from the system, it's still the same. That's just that kind of a 134.40s short zone. Okay. Forgot something, Alex? Maybe gold or WTI? I don't know.
Let's have a look at gold. To be honest,
yes.
You basically answered all the questions. Maybe Mr. Vincenzo is asking if you think that euro-dollar, I know you've spoken about euro-dollar, but if you think that euro-dollar is going to break 61.8, that's the question he's asking.
You're speaking about the short-term 61 or the long-term 61?
Let's see if he answers. I probably think he's talking about the short-term one.
So that's the 112.80? Probably.
Let's see.
Let's see. So of course, nothing like Merlin's glass balls here. We can't see into the future. Otherwise, we will be sitting at the whatever Nassau Bahamas Beach or wherever. And anyway, this is a trade setup. It is just like every trade setup. It is a try. It is putting your finger in cold water and try to find out if it is okay for you, and you will in it if it is comfy for you. And the same with trading here. We just put in the finger at the first time and try to find out if we find some support around that levels. And if we find some let's say willing at the market to move back into territories of 113.20s and up the road. If that is not taking place around that, and if we are nearing 112.80, well, it might be a heavy reaction around there as well. And that 112.67 stop loss we draw it up here could be just getting busted. That's simply to say that is everyday trading like this. And the 2 days trading sentiment, the trading environment is, I would say, quite heavily, and it could be, I didn't check that out, but it could be that liquidity is a little bit more down because of that Brexit theater, possibly. I'm not sure if that is that way. We'll find out later on. Anyway, what is pretty sure is around that current environment and at the Federal Reserve, who gave us more than just a hint about future projections, about future target rates. They won't be hiking in 2019. They said they will end up with reducing the Fed balance sheet in September. They said. They won't be doing anything which is against making us believe to get a strong dollar, because a very strong dollar is hurting the U.S. economy. So I would be very much surprised if we see levels very much down the road in direction 110, just simply due to the fact that they don't want to have a strong dollar. And the Fed is really supporting the economic build-up in the U.S. Of course, it is getting a little bit more reduced, and the GDP estimates are going to be revised a little bit to the downside. But in the end, the U.S., let's say the U.S. motor or the U.S. engine, GDP engine, is still working well. Okay.
I think that's comprehensive enough. Would you like to have a last? Would you like to have a last look at gold as well?
Yes, just a few minutes. Where is gold? Where's gold? Okay, old chart, old box. As we see, we saw that last Friday, and we spoke about that blue trading box around that 1,300 or 1,300 level, which is going to be tested and possibly brought up to the upside, back up again. This happened due to the fact of that stuff I talked about the Federal Reserve, because of the Federal Reserve not hiking into the rest of the year, and possibly a good way to try to buy gold on dips. Every time we see a dip in direction of that one, of that 1,300 level, or in, let's say, 1,290s, 98 level, we will have let's say a chance to buy this dip back up the road. Of course, with a upper target in direction of the old high, which we see here in the chart around the 1,346ers. That's all about gold from the technical aspects. If you see a 10 to 15 bucks bounce to the downside, that would be a so-called buy on the dip strategy. If you see something like a rush up the road, just don't touch it and wait until it comes back down again to buy the dip again. So nothing to be. You don't chase anything. If it is running away, don't jump on it. If something is getting cheap for you, try to just buy it. And it sounds easy. It sounds very easy, and sometimes it sounds stupid. Sell high and buy low. But if something happening on the 4-hour or the daily chart, and something is happening quite heavily and is bought up quite heavily, you should not simply jump up on the train if this kind of a move is already done. So hopefully you have the same quality of weather right here, like me right here. It is sunny and a couple of hours to come, but then it's weekend. I hope you will enjoy your weekend. Hope you will relax, and let's express it that way. And hopefully you will still be there on Monday, and I assume the market will still be there on Monday and will give us a chance to trade. And happy trades today, of course. Happy weekend, and as you like, next week, Friday 11 CT is our date here. Thank you.
Perfect. Well, it's not really sunny in Berlin. I would say it's cloudy and gray. It's like Napoleon used to say. We have 6 months of winter and 6 months of no summer. That's what I can see here. Okay.
Good quote.
Yeah. It's my favorite one. I keep saying that.
Yeah, cool.
Okay. Thank you, Dirk. Thanks for the comprehensive analysis. I'm very sure the audience enjoyed the webinar. And exactly, I wish you a very nice and hopefully sunny weekend, and I'll see you all on Monday. Thank you very much. Bye-bye.
Bye-bye.